Hi, folks. The Nifty has dropped from a high of 26,200 levels to currently about 23,300 levels. The question on many investors' mind is whether this is the right time to enter the markets. If, according to your research, this is a good time to enter, you may still be wondering whether to go in for a lump sum or to do a systematic investment plan. What is the right way to get into it? So, the advantage with mutual funds is that they offer something called a systematic transfer plan. Now, you've seen that markets often follow a trend. When they go up for some time, and when they go down, then that also goes down. So, let's say that you are ready to enter in at this point of time, and you have a certain amount of money, a lump sum of money, which you're holding. For convenience sake, let's assume that that is 1 lakh rupees. You have identified four funds where you can invest this money into. Let's say, for example, a large cap fund, a flexi cap fund, a mid cap fund, and a small cap fund. So make your allocations to these funds. Decide what are the amounts that you're going to invest into each of these funds. So let's say that you decide to put 30,000 into the uh, large cap and the flexi cap fund, and you've decided to put 20,000 each into the mid cap and the small cap fund. Now, instead of coming in as a lump sum directly into these funds, you can instead park this into the respective fund houses liquid fund. As you may be aware, liquid funds are very stable funds which invest in debt instruments. So they normally don't fluctuate in value, for they usually deliver steady returns. Once you park these funds into liquid funds, then you can set up another instruction, which is a systematic transfer plan, STP, whereby a certain amount moves from the liquid fund to the target fund. So let's say that you decide to move 10% every week. So you can set an instruction whereby 3,000 rupees moves from the liquid fund to the respective large cap fund every week. Two advantages to this. One small advantage is that the money has moved out from your bank account, so you're not going to spend it. And while sitting in the liquid fund, it generates roughly about 7% annualized return at this point of time. The other advantage is that you are able to catch the falling trend. Assuming that the Nifty is going to drop further for the next 2 3 months, then you are entering at the point which is about 23,300 levels. But every installment after this could potentially get you an entry at a lower NAV. As you can imagine, the risk is also there. What if markets turn upwards, then NAV start moving upwards? Potentially, every investment that you make could also be at a higher price. Therefore, you have to watch the NAVs of mutual funds carefully. If required, you may have to stop your STP, or you may want to accelerate the pace of movement from the liquid fund to the target fund. So, with these techniques, you can try to catch the falling trend of the market. You have to be okay with this entry level and also watch the transfers carefully and the NAV movement of mutual funds. So, I hope this helps you at this point of time. If you have any queries, please do drop a comment or reach out to us at our contact points, and we'll be happy to get back to you. Thanks for watching.